to hear it.
It's really quite close to it. All right. I think we're live. Yeah. Yeah. It is a loud mouse I'm using too. Anyways, hey, everyone. How you doing? So it's 3:00 Eastern, our Central European time, I should say. And we had a time zone change on the weekend, and lots of other people didn't. So we had some messages that some people came an hour ago to the call. So we expect this call to not have quite as many people. That's the way she goes sometimes until they change this crazy time zone thing. I'm personally against it. However, it's been quite a week, hasn't it? Quite a week since our last call. We see vols really rising. We've seen some big price moves. Very interesting stuff for sure. So we're going to get into all of that good stuff. So while we're waiting for more people to come in, and there's quite a few more people coming in now, so that's great. I'm going to just do a couple of housekeeping items here. And let's see who we got with us today. Andrea, of course. Mika from Helsinki. Excellent. Oh, and Stanislav is starting with questions already. Geez, Stanislav. Give us some time. Just kidding. Load your questions in now. It's a good idea.
Pitiful to strangle regularly. Interesting question.
Yeah, we'll get to that later. Waiting for a few more people to join before we get started. But lots of good stuff happening. I assume everyone can hear me okay. Otherwise, they'd be saying, hey, we see your mouth moving and no sound. So
I hear you.
Yeah, okay, good. There's Antoine. Andre, okay, excellent. Got lots of people coming on. Okay. So today, what do we got going on? What are we talking about? Oh, yeah, I remember now. Good stuff. I like this stuff. And actually, next week, we're going to do something kind of similar, just in a little different vein, but I don't want to give it away. So this week, we're going to talk about being prepared and profiting when trading opportunistically. And I want to cover this because I know a lot of people aren't always in the market. They're not trading systematically. They're not, 24/7. They've got lives and jobs, and they're only coming and checking on things once a week or once a day or whatever it happens to be. So we wanted to kind of set some things up because, for those people, they're not going to catch the bottom of a move. They're not going to be sitting in front of the screen when that happens, right? But that's okay. There's great ways to profit by just kind of coming in after the fact or being prepared beforehand. So I think that's a lot what we're going to talk about. And of course, as always with the Rogue Trader Academy, come and join us, because we're cool, I think, sort of cool anyways. Anytime you want, you can have a 7-day free trial.
We're still to be cool.
Oh, okay. Well, there's a different word probably that could be used instead of cool.
Sad.
We're sad. We're quite sad. Come join us. Misery loves company, so come and join us. Rogue Trader Academy. If you sign up for any of the packages, anything silver and above, then you get the Telegram where you can be sat with us and chat with us all day long, and we'll have a once a week Ask Me Anything call, which is all good fun. And before I get on to that too, there's something quite special from Deribit, and I put it in the offer page. So if you check out the offer page that's here, it's basically Deribit and Signal Plus, which is an analytics platform. It's really, really cool stuff. They're running a trading competition, which starts on November 6th, and you can join teams. And basically, we want you to join our team because, well, I used to think we were cool, but now we're not. Anyways, they've got daily prizes. It's not a competition for how much money you can make. It's on volume. So that's why the team thing is quite nice. So you don't have to worry about taking big chances to try and make a big trade just to win a contest. But they do kind of a lottery every day, random prizes to people who are actively trading. I think they're giving away one long Bitcoin option. I'm not sure if it's, I'm assuming it's going to be a call. Probably all want calls right now. But anyways, they've got a lot of cool stuff going on. So check out the page. Of course, you don't have to join our team. You could join somebody else's team. Just throwing it out there, but it's a cool contest no matter what. But of course, we'd appreciate if you joined our team and you joined our Rogue Nation, became a Rogue Trader like one of us. All right, so let's get on to it here. Let me just Sorry, I'm just trying to find the right button. Let's get into some charts. Obviously, we've had just an immense amount of activity. Vol is expanding like crazy. Markets are a little bit erratic, so let's take a look. So I'm just gonna share my screen, and we're gonna go through this. My window, where is it? Here it is. Bitcoin. You can see me here. Yeah. Okay. So what do we have? We had this massive run up back on October 23rd, the 24th, and well, maybe it was the 23rd. Yeah, 23rd. And you know what? We did poke our head above 35,000. Interesting. You know, that whole number. Whole numbers are like magnets, and they're also things bounce off them, right? Just like any support and resistance, but whole numbers do that. Came down, we bounced in a range for a while. I had my little triangle, which I said is usually a bearish sign. It did come off, but went sideways. Some people can consider those bullish depending on how it forms. This isn't technical analysis 101. We're just doing some basics. However, you can see my long trend line here. Let me just go to a 4-hour chart. And you can see we've kind of got this longer trend line from where we started. So would I expect this to come down perhaps and just kind of bounce around here and then move up off of it? Yes, I would. And that's what I'm thinking. What I said to Richard today is if this thing can hold above 35,000 here, we just poke down through it. But we'll see. If it holds above 35,000, we're just going to keep going up and up and up, I think. If it plunges down and then 35,000 becomes a ceiling again, look to sideways trend for a while, and then we'll see what happens. But you know what? There's no denying it's a pretty bullish chart. Everyone's bullish. We know that the halving is coming. So it shouldn't be a surprise that the indicator's looking that way. And the same thing, over on ETH, a little bit different. Obviously, the news isn't about ETH, but it's getting dragged up. This is our position, which I'll talk about in a minute. My sad story for everyone. But basically, we're kind of, it poked up above its little previous range, little high there. I'll just draw a line. And we had it just poked its head through, and it didn't really go anywhere. So for now, that's holding. Again, if this thing, if this thing goes up and holds, then I think we're just going to keep going up and up and up. We'll see. But we've got vols expanding. Last time I checked, they were, over 60 and holding up. So it's an interesting environment, especially after coming out of the summer, which was just so dead and crappy. And, we're seeing vols at, in the low 30s and selling. Richard was talking about he had a rule then. He wouldn't sell anything less than 40. Of course, 40 looks like a distant memory from now. So right now we're not selling anything less than 60 for sure. We got to roll with the punches, and the markets do this. This is what they do. Could we keep going up? Could go up to 80 vol? Sure, why not? It's the market. And I wouldn't be terribly surprised if it did. I'd expect a bit of a pullback first, but you never know. The market's going to do what the market's going to do, and it is an equal opportunity dream smasher. So, all we can do is sort of be defensive. So maybe what I'll do is I will come into my poll question first, and then after I just look at the charts, then we'll talk about some of these sort of strategies we can do when we're trading opportunistically. All right, so the poll, I'm going to publish it right now. What's our next trade? And the reason why I'm asking what our next trade is and not what to do with the last trade being this one, is because I screwed it up. I actually closed it, not meaning to close it, because I was managing a book and I saw these profitable 1,700 calls and I knew it for some margin. And I closed it and I didn't think about it because you think about a book level. That's why it's hard to kind of pick strategies out of a book, right? And then I realized after I did it, I was like, oh no, what have I done? So anyways, the calls are obviously very profitable. I still do have the shorts, by the way, which are against me, as you'd imagine, but time will bleed out of them, and we'll see. I'll manage those. But let's just start with a fresh slate here. And this is really more about what people think that the market's going to be doing here in the short term. So, hey, we're going to go up. Should we just buy some calls? Should we maybe do some debit spreads, debit call spreads, I suppose would be the better term. Is it going to retrace? Do you think we're going to come back? Maybe take a breather for a while before going back up? I don't know. I don't think too many people think that. Maybe we're going to go sideways for a while. Real possibility. That's been the pattern of the market. Sort of this last year is it makes a big move and goes sideways for a while. For a while might mean 2 weeks and then go back up again. Who knows? We'll see. Or, man, it's a crapshoot. Who freaking knows what it's going to do? And maybe we should just buy some iron condors or just do a long strangle, something like that. So let's just see, everyone so far is leaning on the upside. Not surprising to buy calls and be a little bit bullish or buy some call debit spreads, but I'll leave that poll open until the end of the show. And what I'm going to do here is I'm actually going to leave this chart up, and I'll use it as an example. Here we'll look at Bitcoin. Maybe I'll go back to like a 2-hour chart or something. That's fine. It doesn't really matter for the purposes of what I'm going to talk about here. So let's just say you've got a life, unlike us, and you have a real job, and you maybe on lunch hour you check your phone, or you come home at the end of the day and you see what's going on in the market on your desktop, and you're not actively trading the market, you're not in all the time, you're not managing a book. Well, you see a move like this and you're like, damn. Oh, if only I was long. Damn. Well, you know what? You missed an opportunity. You missed it. So what? Are you going to be sitting in front of your screen when that happens and jump on it when it happens? Maybe there's a chance. And when you do jump on it, do you know it's going to do that much of a move? No, we don't know. You just don't know. Anything can happen, right? So if we're farting around down in this area, we don't know, right? We talked about the trend line. Look at my trend line, just perfectly worked, didn't it? It came back down a bit, went up. Okay, fine. You missed it. Well, what can you do? Well, this is sort of the way I generally trade options is I wait for dumb stuff to happen. And the reason why I wait for dumb stuff to happen is it's sort of the level of imaginary screaming I can hear. And the screaming is we were here and sold some short calls here or some calls here or some calls here. And bada bing, bada boom, those 15 delta calls are in our 70 delta. Or something horrific, and you're freaking out. Your margin's going through the roof. Your P&L is going down. And it's scary. It happens. It happens to everyone. We've been dealing with some stuff, similar stuff. It's the market. It's going to happen every now and then. So the louder those people scream, you wait to the crescendo of screaming. And then it's time to get in, right? Just like Warren Buffett, buy when there's blood on the streets, right? Sell when everybody's euphoric. It's the same sort of idea. You can wait for things to happen. You're not going to time it exactly right, but let's say you get home and this thing has just done this and it's pulled back. So you missed the top. Okay, whatever. Whoever catches the top, 1 out of 20 times, don't worry about it. But now we're in this range after this big move. Well, vols have shot through the roof. They're a hell of a lot there. Yes, they're not at the highest they've ever been on this move. That's fine. You can sell some nice vols. You see it settling into a range. All right, I'm going to sell, maybe a 3,800 or a 40,000 call spread. Wonderful. Great. It's better than where you're down here. And you're jumping after the fact that a lot of people are in pain. A lot of people might be pushed, be squeezed until they get out. But it's not going to threaten you. If I've sold, a 40, 42 or something, they can threaten these people and push up to 37, to 38, up to 36, whatever, and it's not going to threaten me. My P&L might dip a little bit, my theoretical. It's not a big deal. So that's one way we can look at these opportunities where, hey, you're not in the market. You don't have a bloody clue which way the market's going to go. That's fine. Just wait for something dumb to happen. And by dumb, I mean a big move. And I don't mean dumb because there's a reason why this happens. Wait for something dramatic to happen. People are being put under pressure. People are being put under strains. The volume vols are increased and premiums are grossly inflated. Wonderful. That's what we want as vol sellers, right? So great. That's one thing. You wait for stuff to happen versus timing it. Otherwise, maybe you're coming along here and you're thinking, you know what? That Shane's a pretty smart guy. He's a pretty damn smart guy and I really like him. He's good looking too. And he's probably right about this trend line. He's probably thinking, I think this thing's going to go up, but I'm just not sure and I've got to work and I'm not going to be around. All right, we'll just set limit orders. Set trigger orders, okay? Just so if we're down here and thinking, if this darn thing goes up, more than let's say 3% or let's say 4%, I'm just going to be in. I'm going to be in on this market, okay? So we're going to be in at 31,000. I'm going to draw a little 31,000 line here. But gosh, it might go down. I don't know, right? So we're going to set, 3% down or 4% down, right around there, 28.7. Okay, fine. I'm going to put my trigger order down, somewhere down there. And these are future trigger orders, right? If it goes up through this, I'm going to buy. I'm going to get into the market on a future stop order. Maybe I'll buy 1 Bitcoin worth or half Bitcoin or 0.1 worth or whatever it happens to be. I've got no positions. This is good for me. I've got a Bitcoin, or I've got some Bitcoin in this account, so I know it's going to be good for me, right? The value of Bitcoin is going to increase, but I'm going to load up on some futures as well. Boom, it'll get me in at market. Maybe I get filled here, maybe here. Who knows? Doesn't matter. You don't always, as we talked about before, you don't always get filled. You don't control your fill price on a market order. It just depends on market liquidity. Bam, comes up here, happy days. You come home, it's done this, it's bounced around. Sell them. Take the profit. Easy peasy. Of course, this thing could have just wicked up and then come right back down. That's going to happen too sometimes. But if you think it might be going a certain direction and you want to participate, that's what you do. If it happened to come off instead of going down and you thought it was going to come back down into this area down here, happy days if it did. Okay? That's all really I'm talking about with these. Just very, very simple things. And I use these all the time. I don't necessarily use future orders all the time, but quite often I do. But I always do trade. I'm sort of a counter trend trader. I fight the trend. Generally, it's not always fun. But if you can be really patient, and if you replace patience for just not being in front of your computer, how many times do I wish I was not in front of my computer and I made a trade and the thing just kept going, right? It's like, oh my gosh, I wish I would have come home from work at 6 o'clock and then put the trade on, would have been much better. Of course, it doesn't always work that way. But if you're just selling casually here and there and positionally, this is a fantastic way of viewing the market. It's just set those trigger orders outside the range. If it does blow through on a real move that goes 10, 12%, hey, you're in. Fantastic, you're going to make some dough. You have to be aware that we'll wick through sometimes and come back down, and it happens. Otherwise, just sit and wait for opportunities. Don't feel bad about missing a big move if you weren't there to hit the button to get in, okay? So I think that's sort of all I really want to talk about with this trading opportunistically. It's easy sometimes to look at charts and say, oh, you should have done this. No kidding, right? But this has worked really well for me over many, many years. And I think that if you can't be in front of the computer, you don't want to trade all the time, it's a good way to keep yourself safe because you're not in on every little thing and getting in. The noise isn't sucking you in. It's a real move. And I think it's a great way to make some side money. All right. Let's see.
I think it's worth saying, Shane, that the same thing works with options, right? Can I share my vol surface?
Yeah. Sorry, I had to do a couple. Okay, I'm good. Yeah, you should be able to share now. You know what? It's interesting. I just took a quick glance at the poll, and we're evenly split right now between the market going up and going sideways. So that's quite interesting.
Interesting. Well, people are picking up on the vols. So here's the chart for the past month. The blue area chart is the spot price, and the yellow line is the 1 week at the money forward vol. And again, I keep kind of saying this, that you tend to see this very, very strong correlation between literal movements in spot price and vols. The 1 week, 2 week, and 1 month tend to move very closely together, sometimes under each other. So actually, putting in a high offer for a call spread would have achieved the same thing actually as being at the bottom of the rally. You'd have just get made into your call spread on these super high vols. And it's worth noting that where we are at the moment, we had a vol spike up to maximum 70%, not very long. It sold off very quickly into the last Friday night, and then actually started squeezing up again over the next weekend as there was an anticipation of a big news week in the US. And we've seen vols generally squeeze up again. Worth noting that it's only, 16 days ago, the vols were kind of half what they are now, which essentially means the option prices were half what they are now. Which is why I never ever sell vol into 40, and in fact, now that the market regime has moved, as Shane has said, I'm looking for 60 to sell because I could easily see us going to 70 again for a while, just squeezing up, and it can be uncomfortable when the vols are being squeezed. You're just having to sit there and wait. You don't really want to exit out of positions at a higher vol than you went in. And also, I think worth looking at for these little dips in vol as people are readjusting. So to maybe go in on the calls on if the skew gets positive as it is now, and then wait for the skew to roll off, and then go in on the puts. Maybe put a little bit of a futures hedge in while you're waiting, and then see if you can even out the position and get rid of the futures. And another feature of the current market actually is that the very high cost of carry in the perpetuals and the implied yields in the futures pricing, which has just started coming off, by the way. So I'm beginning to wonder whether that will soften. The point about those futures yields or those implied yields and the cost of carry on the perp is that while you're hedging the delta of your option, you're actually burning money that you would have been earning on decay. So you kind of want to get your book balanced, for too long, ideally. Otherwise, you just end up wondering why you're not making as much money on your calls as you should.
Mm-hmm.
But I did notice that vols just, if I go to the 1 day, true to form, spot and vols seem to be kind of following each other, right? You got this little general easing off in vols, and I wouldn't be entirely surprised. I wouldn't be entirely surprised if there was some amazing news out of the US to say that, I don't know, the president's going to invest $1 billion in ETFs. But I also wouldn't be surprised if no news comes out that we've had a busy news week. Maybe it's time for people to just start easing off. They won't want to be paying a whole bunch of carry into the weekend. So it might be that vols come back in into Friday night, maybe.
And it's worth mentioning, too, that this past weekend, the margin regime in Deribit changed and the requirements expanded, which is actually what caused us our issues. So instead of a shock of 15%, they went to 20 and they adjusted vols. So that happened over the course of a few days. So you might have noticed, you're using more margin than before. Well, it's not just you; it's the system changed because they're compensating for increased vols. So I don't know if you have anything to want to add on to that before we get into questions.
Yeah, it's worth remembering that. So whenever you've had a long period of low volatility, my heart always sinks whenever you see an announcement by a prime broker or an exchange when they say we're going to reduce our margin requirements. You can kind of, what I hear when I see that is, okay, vols have been low, people have been trading less, the exchange needs people to put more volume on because they need to make some money, and they're feeling that the market isn't going to go too far, so we'll narrow we'll make the margin requirements softer. That I always know that okay, in about 3 months' time, there's going to be a whole lot of pain in the market because people are going to go in harder. They're going to mentally they'll be using their 30% or their 50% margin or whatever their limit is, and then as soon as there's a volatility event such as we've had over the past 2 weeks, suddenly all the risk managers in the exchange or the brokerage say, well, wait a minute, we can't have people with these massive positions on. We've got to tighten up our margin. So they'll give you a few days. They'll announce it prior, and Deribit were good about it. They incremented the spot shocks from 15% to 17% to 20% over the course of Friday and then Monday, and they increased the vol shocks from 40 to in increments of 5, wasn't it? 40, 45, 50, 55, 60 over about 4 days. But But what that means is that everyone's going to get squeezed, and everyone's going to become a buyer who was short, which means you're then going to vol squeeze as well as a shock in the market, and so that tends to hold vols up because there's no one's left with any firepower to sell into those vol squeezes. So yeah, and then it's just about patience and resilience.
Yeah, and it's probably worth saying too that this happens in traditional markets too. This happens all the time. It's not just a crypto thing. So yeah, that's the cycle of brokerages and exchanges.
You have to remember that they're not there for your benefit. They're there to make a living. So they want you trading, but they don't want you blowing up. It helps protect you.
Okay, so let's just jump into our questions here, Richard, and then we'll wrap it up with the poll question. And first of all, Antoine is asking about the trading competition. If you go on to the offer, you can see the offer here, the Deribit Signal Plus page. And I'm begging you on my knees to join our team. I'm not really. I'm just kidding. You can join any team you want, but if you want to join the cool team, you can join us. But he's saying that do you have to plug the API key into Signal Plus? Yes, you do. That's how they're measuring everything. Yes, it's your real money. Again, it's not a competition to see who can make the most money. It's just based on volumes. So the bigger your team, the better you do. So just make some trades and
just think of it as a lottery. Once you signed up, you might get a prize.
Yeah,
I wouldn't try and overtrade in order to try and outcompete some bigger team.
Yeah, just do your regular thing you're going to do, and hey, maybe you win some prizes. There's actually the image I have is for the daily prizes, but there's actually $100,000 total prizes for the competition. So it might be cool. Maybe we'll win a few bucks. That'd be fun. Or maybe you could win a few bucks.
Just one thing I wanted to say about Signal Plus is that it does use the API fairly aggressively. So you might find that if you're running Signal Plus on your account, and you also have your Deribit window open, sometimes your Deribit UI window will say too many
API connections.
too much API traffic, and you have to refresh. If that happens, you can just close down the Signal Plus window and reopen.
For sure. Yeah, I'll post the link here in the chat, Antoine. In the meantime, and so I'll read the question here from Stanislav. I cannot make any back tests. So what do you think about selling the 40 to 30 delta ETH strangle regularly? And what about adjustment? Richard, if you want to handle that, I'm going to find the link for.
Selling a strangle regularly is absolutely fine if vols are dropping, because statistically you'll win. And selling a strangle regularly as vols are rising will tend to cost you P&L, whatever the strikes. So it's not really about which strike you're willing to sell at or buy at. It's about adjusting to the market regime and doing what the market needs you to do. If we're right and vols start to soften into the weekend, then obviously selling strangles, $40 strangles into the weekend, definitely a money spinner. And then if vols do what they did last weekend, which is sort of drop down to sort of 45 and then start to rise again, obviously you'd want to think about taking profit. So I don't think there's any. I do have books where I trade systematically, looking for value in the vol surface, and they do consistent trading. But it's not as simple as pick a strangle and just keep on doing it. On average, if you do that over time, probably you'll make money, yes, but you will have drawdowns. You're quite easy.
That's because I had the mute button on. Alex is asking about, should we join as one team where you have chances to generate most volume? Yeah, so basically it works. You can register as an individual. That's cool. There's probably prizes, but there's also team competition. So you just, when you go to this page, this is our direct to join the Rogue Trader team. But if you go to the Deribit platform, you can see all the teams. And maybe there's someone else out there who's you'd rather join. That's fine. But it'll be a fun competition. There's prizes no matter what. But yes, you'd all be under the Rogue Trader team if you joined to our link. So up to you. Let's see, any more questions?
Antoine says, the Signal Plus guys need your right permission on your key. Yeah, because their platform also has this thing to trade you into positions, so you can sort of say, I want to be in a call spread in these volumes, or with, and go in this size, then go trade me in, and it will try and trade you in leg by leg into this. I don't know whether you have to use that or not.
No, I think it's just trading on the Deribit platform. And if you've got your APL linked, I think it registers. From what I understand, I suppose I should figure that out for sure. But I assumed it wasn't trading through Signal Plus. We should actually do we have not really played with Signal Plus much. We were introduced to it maybe a month or two back. But it's got some interesting features, and that trade-in feature is a good one. If you're putting on Iron Condor or something, it will trade you in intelligently. You can kind of set it, walk away, and it's going to try and seek out the best price for you. Oh, I saw something going like this. I thought it was like your finger in front of the screen. It was the dog tail as it went by.
Yeah, it's spotted as his tail. There's some guy outside the door, and the dogs are just going to say nothing.
All right. Hey, we've reached the end of our show here. Hey, and Andre, thanks, and good to have you with us. If there's any final questions, actually, let me just close the poll before we're done. I close the poll. So it's dead even.
I have a final question to say.
Okay. Well, let me just wrap up the poll because it's dead even. Market continuing up versus going sideways. Richard, what's your thoughts? Would you rather sell an Iron Condor? And let's think about the skew right now. It's pretty heavy to the call side still. We've just had a little pullback. Maybe that's balanced a bit. But or do we want to play the upside?
Well, the 2-week 10 calls are still 11 vols higher than the 10 puts.
Okay.
There's still about a fair amount of skew, a fairly steep smile. My thinking is probably if you sell an Iron Condor now, you're probably overpriced you're getting more value than you should be on the calls, and probably about the correct value on the puts. So probably on average, it's okay.
Yeah. I mean, under normal circumstances, after this type of price action, I'd be all over the Iron Condor. But we're not really under normal circumstances because we've got this specter of the halving coming up, and a lot of people coming on. We've got this ETF thing going on. We might just remain, strong for a while, and I'd hate to have to.
But if we put the Condor on and hedge it with futures, I would imagine that. I mean, to stay at 60 vol implied, that means that long option buyers are going to have to see 2.7% move per day in the market to make any money.
That's a stretch,
right? It's a lot of vol to be sustained. I mean, it's not a lot of vol to be there for a week while everyone's being squeezed, or 2 weeks while everyone's being squeezed, but for a longer period, it feels like a lot to me. That's all.
Yeah.
I mean, it could be 80 for the next month, and I'd look stupid. But I feel it's a good bet. Being long calls probably isn't a bad bet either.
Well, I sleep a little easier at night. Sometimes these moves happen overnight. You wake up and it's gone up 6%. And you're like, oh my gosh, I can't believe this thing won't stop going, right? And I mean, I've been in that situation many times over the years.
What about this? If let's wait and see what it does into Friday.
Okay.
And if vols sell off into the weekend, let's get long a call spread. And if they don't, let's do an Iron Condor. Okay.
All right. Okay, so for next Thursday, we'll have that lined up. We'll have some type of a trade on. Again, we do. Let's not talk about separate account right now because we're not quite there. But if there's no final questions, we'll shut it down until next week. Hey, happy trading. There's a lot of volatility, a lot of movement, a lot of opportunities, and a lot of chances to get hurt too. So trade carefully. Make sure you're covered. Don't leave naked positions open in this environment, or any environment for that matter, especially now. I'd hate to have you blow your account out and not be able to join us anymore. And of course, anyone who wants to join us, Rogue Trader Academy, Sign up, 7-day free trial. You can chat with us, trade with us all day long. Until next week, we'll see you next Thursday.
Okay, bye.